that we can see the high priority, the high caliber trades. And I think the Euro Aussie is one of those setups. So allow me, we'll do it today and next week. And I also have to do the copper for Philip. Okay, so this is the dollar Swiss. And just by looking at the weekly, it's not really a buy signal, nor is it really a sell signal. We don't have any failures. All what we have is just kind of in a range. It is a positive week. It went up to the structural point of 99.18 and it failed. And it came back from the it came back about 100 pips from the structural point to close the week at 98.09. So when you take a move like this to a structure point and then your failure is kind of a strong failure, or actually the price moved weekly, moved a big move to the downside, you just have to be careful about this. Yes, it is a buy, but it seems that the Swiss is, or the dollar hasn't yet gathered momentum to this against the Swiss. And if you look at the intraday chart or the daily chart, you would see that you had 3 consecutive days to the downside. Having said that, yes, we have 3 down days to the downside, but this final close is a very weak neutral signal, or a buy signal, if you will. I mean, it's a nothing. I mean, if that's a trade, I will be taking a short. I mean, it's just sitting at a point where it gives us a no-brainer trade. It gives us an easy trade. The bias is to the downside here, but we didn't get the sell-off that we were expecting, and we see that there is strength in the dollar versus the yen, there is strength in the dollar versus the euro, there is strength in the dollar versus the pound. The dollar is sitting at a structural point against the Aussie. So this may just give us a little bit of a bounce to the upside, because we didn't get so we're gathering positive momentum in all the other pairs, and maybe this would be the last one to gather momentum or positivity to the upside. So it is also a no-brainer trade. It's an easy trade. It shouldn't take a minute. Okay, so why it shouldn't take a minute? Because it's sitting at a reference point, which is this point right here, which is the 98.09. So this is going to be our selling point, is going to be 97.90. Our short point is going to be 97.90, and our buying point is going to be the 98.20. I just want to make sure it goes above the buying point and gives it some room to work. And if I buy it above the 98.20, I'm going to place my stop below the 97. I'm just going to place the stop below the 98 number, so I'm going to put it the long stop 97.90. I'm going to place my short and the stop one at the same, and my structure long is still the 99.18, and my structure short is still the 96.47. And if I go short below 97.90, going to place my stop right above the 97.20, the 98.20. It's just it's not one of those glamorous setups, but again, this would be the last trade that you'll have on your hierarchy, because again, we're looking at two currencies that are. So anyway, let's wrap it up. So we're going to buy above 98.20, and if we do, my structure long is 99.18, which has been from the same from last week, and if I do buy it, my stop is below 97.90, so I'm risking about 30 pips on this trade, and my short is below 97.90, and my structure short is 96.47, and my stop is 98. Just keep in mind that you want to keep tight stops on this, because again, this is just, it seems to be that the dollar Swiss is the last dollar pair in the move. Okay, that is the dollar